Hello, everyone. My name is Matthew Frailey, founder of BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading systems, like you see here, since 2003, over 20 years for professionals and individual traders. As you can tell, I have a cold, so hopefully you can still understand me. I actually got sick last Friday, still trying to get over this thing. Anyway, before we get into this newsletter, again, real quick, I want to go over our KISS systems. This is proprietary to breakpointtrades.com. On the website, go to systems, go to KISS STS tables, and this is a resource that is exclusive to Breakpoint Trades. It's a trend following system that I made a couple years ago that you could apply pretty much to anything and get profitable trades. We have this system applied to various baskets, all the S&P 500 stocks, NASDAQ stocks, ETFs, Dow, etc. Anyway, when you go there, you'll see today, for example, on our BPT basket, let me close that, Meta actually hit its stop loss. If you recall, the system went long Meta back in November. It raised its stop 31 times. So it was one hell of a trade. Here's the system for Meta. It went long back here on November 15th. You can see how many times it's raised its trailing stop. Today it was hit slightly within about 60 cents. The smart trailing stop was listed at 292. Today's low was 291.60, I think. And I bring this up because I get questions about this. They're like, it was barely hit. Do I stop out? Again, that's up to you. What I like to do is whenever the smart trailing stops are getting close, I pull up a chart and I look at it. I look at a 60 minute, a 2 hour, 30 minute, whatever. And I want to see if the charts tell me that, hey, it's just a pullback and we're likely going to rally again, I'll elect to give him more room. If it looks weak, then I'll exit. Okay. I've also at times used the previous smart trailing stop. So if I thought that Meta was still going to go up again, maybe I would use this previous one. So again, it just depends on you. But regardless, even if you exited today, that was one hell of a trade, over 170% from that original entry. Okay, so let's go ahead and get back to this update. This is a state of the market technical analysis review for July 24th, 2023. This is our back-end recording for the website standard newsletters. I'm going to go and get this started now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Monday, July 24th newsletter. Tonight's newsletter, as you can see, divided into 6 major sections. Same general theme as we always keep. As far as the market indexes, we saw a slight gain for the major indexes today, anywhere from a 1/4% to a 0.5%. Again, no technical changes really from what Steve discussed on the weekend. All right. Otherwise, strength continues, especially in the energy area, XLE, oil services, and some of these commodities like DBC, DBA, the grain sector. Crude oil regained its 200-day moving average. So we're seeing pretty good strength there in these commodities lately. And also this week, remember, a lot of key items this week, particularly earnings. We have Google and Microsoft report on Tuesday, the FOMC decision on Wednesday, Meta reports on Wednesday as well. Second quarter GDP on Thursday, Amazon reports on Thursday as well, PCE inflation data on Friday. Also, guys, I added some trade ideas. These are the ones I added. The new ones, LU, VBTX, VNet, 9, etc. Again, we've had some astounding trade ideas, so I hope you guys are trying to play some of these. Next. Item number 2 shows the index sector table, what transpired today. Again, you can see that, like I said, the slight gain for the major index is up 1/4% to a 0.5%, with the Dow leading. Most of the sectors were up today. Some weakness in biotech, drugs, utilities, slight semiconductors, slight pullback on transports. Otherwise, gains everywhere else. The strongest sectors today were said were the banks, financials, and energy sectors. Moving down to currencies, US dollar was up 0.36%. Remember a couple weeks ago I said the dollar looked like it was poised to at least have a reversion to mean bounce, and we've been getting that. Cryptocurrencies were weak. Bitcoin, as you know, I was showing this shelf support. It looked kind of weak, and that was lost today in a good way, down 3%. Commodities, mostly to the upside here, except for natural gas, which was down 0.9%, but otherwise solid gains here across the board. The index itself, DBC, up 1.8%, crude oil up 2.2%. It regained its 200-day moving average, and that's a big deal if it can hold that. The 200-day moving average for crude oil has been a sticking point for the last year. So positive that it regained that. Like I said, natural gas down, copper up 1%, DBA up 1.5%. But look at some of these gains in these agriculture area. Corn up 6%, wheat up 8.6%. So big moves there. Now the precious metals, they continue to pull back, which we expected. Gold down about close to 0.5%, silver down 1%, GDX, the miners, down 0.64%. I am watching this pullback. I do think on this pullback is an area to start scaling in on these. We'll discuss that a little bit. And 10-year, 30-year, they were up slightly today. Next, item number 3 shows the economic news calendar. I already covered these on the opening comments. Remember, we have various news items like the FOMC and, of course, various earnings this week. All right, let's go and jump to some charts. So before we do that, this image here shows you the image taken directly from the website, from the systems section. When you click on KISS STS tables, again, unless you're brand new to Breakpoint trades, you should already be well aware of this. But this is a proprietary trend following system that is non-curve fit, that can be applied pretty much to any instrument. It has entries, and then up over time it raises a trailing stop. We call them smart trailing stops. It simply follows the trend, raises the stop, and will stick with that trend as long as possible. Today, Meta was finally stopped out just slightly. It was able to raise its stop 31 times. It was able to bank about 170% winning profit. Also today, VYM had a new smart trailing stop raised from 104.40 to 107.10. All right, then at the right, you can see the current percentage that these positions are up. So VYM's up 1.6%, not that much yet. The S&P's up 11% from that entry in March. Apple's up 37%. AVGO up almost 75%. NVIDIA up 164%, etc. Again, these system tables are updated once a day, usually within the first 10 or 15 minutes after the market closes. Valuable resource. There's nothing else out there like it, guys. This is something that I came up with, and I was only able to come up with it, by using the knowledge that I've gained over the last 25 years. So life's a journey, and that journey enabled me to come up with some of the logic for this KISS trend systems. Next, item number 5. These are the stocks that are some of these mega cap stocks that are having earnings. So Google and Microsoft report tomorrow, the 25th. You can see where the current smart trailing stops are. Microsoft 336, Google 115.80, and then Meta and Amazon report on the 26th, and Amazon reports on the 27th. Now, Meta was slightly hit its smart trailing stop today by about 60 cents. Whether you decide to give it more room or not is up to you. And Amazon is still holding that smart trailing stop. Next, let's take a look at Meta in particular. And hopefully this answers some of the questions. Again, I already discussed this in the opening video, but if you're just I'm recovering it again here in case you're only looking at the standard web page newsletter. So this shows you the system trade for Meta. It went long originally on November 15th at price of 117. It put an initial stop at 95, so pretty wide stop initially. But then you could see it was able to raise that trailing stop up over time. As price worked higher, it kept the stop wide enough to not get hit by a lot of noise. And it was able to raise that smart trailing stop 31 consecutive times. Pretty amazing. And today it was finally hit just slightly at that 292 area. Okay. It was able to lock in around 175% winning trade here. That said, you know, there's many ways to play these systems, guys. You can follow them, as they are. If the smart trailing stop gets hit intraday, you could exit. The other thing I like to do, and it brings a little subjectivity in, but again, that's how trading is. It's not an exact science. So Meta here, it was hit by 60 cents. It's possible that if you think Meta, one option would be if you thought Meta was going to go higher, you could have just simply had a stop wider than that current smart trailing stop at 292. Maybe use the previous one at 283 if you wanted to give it more room. Okay. The way I make the determination is whenever the smart trailing stop is getting close to hit or is being hit intraday, I'll go ahead and pull up a subjective chart on my side. I'll look at a daily, I'll look at a 60 minute, a 30 minute, a 2 hour, and I'll look at it. And if it looks like a flag on a pullback or a wedge, that it looks like it's going to rally again, well, I'll give it a little more room than at smart trailing stop. But if it looks bearish, then I'll go ahead and exit by the smart trailing stop. So that's some things you guys could consider if you want to, have a you can either stick exactly to the smart trailing stops, or like I said, you could give them a little wiggle room if the charts are telling you something different. So, be open to those possibilities. And hopefully that makes sense. Let's go ahead and move on. Item number 7, moving on to the major indexes. So here's the 4 major indexes: the S&P, triple Qs, IWM at the bottom right or bottom left, and DIA. Now, when you look at these, let me zoom in a little bit. No new smart trailing stops here. On the S&P, it's still pretty wide at 4443. Again, when I see that, I like to round them down to 4440, for example. QQQ still has quite a bit of room. IWM, a lot of room there as well. We have a DeMark 9 recently, so little pullback here. And if you look at DIA, we have a DeMark 9 there as well. Notice how wide the moving average ribbon is. So these are a little vulnerable maybe to a short-term pullback. Again, when the moving average ribbons get too wide, usually you get some reversion to mean action. And they're pretty wide there, especially on the Dow. I think the Dow is up, 11 days in a row. So that is getting quite extended. Next, image number 8. Here's a daily view of the major indexes just from the stock charts. Just showing the action here. Again, lately the Dow has been the strongest. It's right in its upper Bollinger Bands. The S&P, little sideways action. It's still above its 5 and 9 EMA, while the NASDAQ is approaching its 20-day moving average. Still a little room there left. And IWM is still above its 9 EMA. Next, chart number 9, here's the Dow. Again, the Dow, back in May, I showed this potential inverse head and shoulder pattern, and so far that has been playing out. Last week, we broke through that resistance at 34,700, and we've continued strongly higher. Again, short term, we're quite extended here. Look at the 14 RSI. It doesn't get overbought that easily, so we are quite stretched here. Again, the trend is strongly up, but we could see a pullback in the short term, maybe to the 9 EMA, or even if you had a stronger pullback down to retest this previous resistance, would now look to add as support. Next, moving on to the S&P charts, chart number 10. Here's the weekly view of the S&P. Again, we're at the top of this channel, and you can see above another potential resistance level. So we'll see what the market does in there. One thing I want to point out, guys, while we do have a little RSI divergence up here, there is no MACD divergence. And remember, when we were quite bearish going into late 2021 and early 2022, note that we had MACD divergence back there. We don't have it here. So what this could be telling us is that we get a pullback maybe this fall, but it forms a higher low and then rallies again. As you know, or some of you may have heard, Mike Wilson kind of, had to capitulate today. And there's a whole article about that. I'll let you read that. But anyway, let's move on. Chart 11, here's a daily view of the S&P showing the channel that we've been showing. Again, we tagged the upper channel last week, pulled back a little bit off of it. Again, so far, just been a minor pullback. We're still above the 9 EMA here. But this is the chart here to monitor over time. And again, guys, just from a technical analysis standpoint, just absolute textbook action. The time really, well, let me start over there. So, just for example, this area here, this horizontal line, you could see how that was major resistance. And once that was broken in June there, the time to really add more to the index is when it was on that pullback where it found support at previous resistance. Just absolute textbook action. Next. Chart 12, here's another daily view of the S&P, one Steve discussed on the weekend. So one option here he has is a pullback, maybe a retest of this little ascending triangle, or we go up again, make another high, into early August. That would allow a lot of these mega cap stocks and some of these earnings to get out of the way. Then we have our seasonality deeper pullback afterwards. Next, chart 13. Here's the S&P 500 chart. This shows you the alternative, some wave counts. Again, under the bullish view, you'd be in a wave 3 at this point, with an eventual wave 4 pullback, and then a new high is a wave 5. Next, chart 14, here's that zoomed in daily view that I showed last Wednesday. I talked about that doji being a little area to take an aggressive short or a hedge, and it did give you a little trade, but so far just a little trade. I mean, we're still holding this 9 EMA, okay? So the market is very strong. When you're over the 9 EMA, I mean, what can you say, right? The thing to do, guys, has not been to fight the trend. Too many people try to fight the trend. And that's the good thing about the KISS systems. The KISS systems will just stay with the trend. I know a trader, Steve and I talk about him. He's been shorting for the last month, just constantly shorting. And, he's a top picker and he's taking a lot of heat. That's not how I like to trade, and most of you not either. It's best to follow the trend. It's better to let the market structure break symmetry, then you look to short a lower high, but do not fight the trend. Next, chart 15, here's the daily KISS trend system for the S&P. Again, no changes here. Smart trailing stop remains at 4443. System went long back in late March. Next, chart 16, here's the 4 time frames. So what we got here is we had a DeMark 13 on the half day, the upper right. So far we've consolidated a little bit from that. Does that end the consolidation, or is this like a little A, B, and then we get a little C down? We'll see. We're still holding the ATR on the 130 minute. On the half day, the 78 minute, we did bounce off that support cycle. We're below the ATR. Next. Chart 17, here's the half-day chart. Again, just showing this clean channel. Remember, we showed an inverse head and shoulder pattern back in March. That was the time, guys, when all the AI hype started and it was all over the news, NVIDIA, etc. That was the time really to really start capitulating and going back long the indexes if you weren't. Remember, that's when the KISS systems went all long. Anyway, we're still in this channel. No changes for anything. Next, chart 18 is the 60-minute chart. Last week we bounced off that little demand zone. So far we got a lower high in place. Now, is the correction done, or is this little B and we come down in a C again. Either way, I am looking for another up move in the market, but uncertain if this little consolidation is done yet. Next, chart number 19, here's a 60-minute view showing those wave counts. That a little wave 3 perhaps last week, or the wave 3, 5 could be shifted. Again, either way, we're still uptrending here, but these are the counts I showed last week. Next, chart number 20, here's 15-minute chart Steve discussed on the weekend. So again, a couple options here. You know, today's high could be a wave B. We come down again in a C, or it forms something more complex. But that's one option I'm watching. Next, chapter 21. Here's a 15-minute chart, very clean chart. Again, you can see the little channel we're in right now. And we'll see what happens this week, guys. All right, let's move on. Chapter 22. Here's the triple Qs. This is the weekly chart. Steve discussed this one over the weekend. This doji candlestick is a potential resistance area. We had a doji candle last week. So kind of lining up right there. Next, chapter 23, triple Qs daily. Okay. So as you know, recently on those last two pullbacks, price bounced right off the 20-day moving averages, which we were looking for. And it's really this simple, guys. Whenever you're riding that 9 EMA up, once you break the 9 EMA, you generally find support at the 20-day. Well, and if the 20-day moving average is lost, then you almost always test the 50-day. Okay, it doesn't always work out that way, but a lot of times it does. It's a very simple guide. So currently, the Qs are weaker quite a bit than the S&P and especially the Dow. They're below their 9 EMA, whereas the S&P is still above its 5 EMA. But next, the support below is still that 20-day moving average. One thing that does concern me a bit, but again, we haven't broken any supports, is we do have a pretty good MACD divergence at these recent highs, and we do have a slight trend line break on this 14 RSI, and I find these trend lines drawn on the RSI are pretty good. Now, if the Qs just rally up here, then we may need to adjust that trend line to the recent low there, but it is something to watch, a little, shot across the bow to keep an eye on. Next, chapter 24, here's the KISS trend system. Remember, the KISS system went long back on March 13th, so very good entry there. It's up nicely. Current stop is 364. Next, chapter 25, here's the 4 time frames. Again, you can see that DeMark 13 on the half day upper right had a nice little top last week. On the 130 minute and 78 minute, we're below the ATR. We have a DeMark 9 on the 130 minute. We're trying to hold this little support cycle on the 78 minute. Again, we'll see what happens tomorrow. A couple other things to monitor, guys, are the 60 stochastic. The 50% area tends to be an important support, and you can see, especially on the 78 minute right there, we're not too far away on the 130 minute. Next, chapter 26, here's the 60-minute chart. Remember this ascending triangle I was showing back in early July. That obviously played out. But last week I talked about this very obvious MACD divergence. And indeed, that did produce a nice pullback so far. Next, chapter 27, here's a 2-hour chart just showing this little channel to monitor. Next, chapter 28, here's a 30-minute chart. So monitoring this, there is an open gap here. So if we do get pullback tomorrow, that gap could be potential magnet on a fill. Next, chapter 29, IWM small caps. This is the weekly chart, as you know. Price found support during 2022 at that demand zone, and it's rallied all the way to the top of this big coil, which was our initial target. Next, chart 30, here's the daily view, just a nice clean chart showing this channel. Now, one option here, you can see we've been pulling back from that upper trend line. This could be forming a big ascending triangle. One option would be this forms a higher low and then eventually rallies and breaks out of it. Next, chapter 31, there's the other view that we had back in April, May, and this obviously played out. We were looking for at least a rally up in that wave E, And we've gotten that. Now, does that complete the pattern, or is this a more bullish case where we get a pullback here and an eventual breakout? We'll see. But the initial target was achieved at the top of this coil last week. Next, chart number 32, there's the 60-minute chart. Now, you can count 5 waves up there, and we've had a pullback here. So we'll see what it does from here. And that'll do it, guys. Quick check on futures. Futures, ES futures are down about 3 points tonight. So not a big move. Next, chart number 33, here's the VIX. So far, the VIX has, it's been forming this, it's been trying to base there, and the VIX was up today with the S&P. So take note that they both were up. Next, chart number 34, here's another view of the VIX as a potential wedge. Still definitely something to monitor. Next, chart number 35, here's the S&P versus the high yield corporate. Remember, the two tend to move together. You look for divergences. And we did have a divergence between the two where high yield corporate made that lower high versus the higher high in the S&P. It did produce a little pullback. My thought for the market is that we might have one more pullback as a wave C to complete this little wave 4. Again, we'll see how things react to earnings this week. Let's move on. Follow up on some of these sectors. Chart number 36, here's XLK. Very similar look to the triple Qs. We have a nice divergent high, nice pullback. One thing to watch is this RSI trend line here. You can see we're basically testing it. Another option perhaps could be that, we're seeing sector rotation, that the Qs might not make another high, make a lower high while the other indexes do. But for now, they're still strong. But for now, we're monitoring this divergence and these trend lines on the RSI. Next, chart number 37, here's XLC communication sector. Slight breach of that little steep uptrend line yesterday or last week, but basically we're right at the 20-day moving average now. If this is lost, then you get a quick move down to the 50-day. Next, chart number 38, semiconductors going sideways. This could also perhaps morph into a little head and shoulder pattern if it forms a lower high. You could see that recent MACD divergence. Next, chart number 39, transports, little ascending triangle. This been awesome. We were bullish on transports, a couple months ago, and that's played out. Next, chart number 40, XLF financials. Heck of a rally here from that 2050 MA squeeze. We're now testing the underside of this potential supply zone. Next, chart number 41, bank sector. Remember, a couple weeks ago, we're showing this potential inverse head and shoulder, this coil. We broke out of the coil, back tested it, and we've been working higher. Market holds up. This could easily still work up to its 200-day moving average or to this potential supply zone above. Next, a couple ways to play that were some of these ETFs like KBE, that's the bank ETF, been showing this as a potential inverse head and shoulder. And if you took that trend line break around 38 a couple weeks ago, it's had a nice trade. It's now nearing its 200-day moving average, but really there's not a lot of resistance here. This could still push higher. Next, chart number 43, there's KRE, that's the regional banks. Again, similar pattern as well. Nice clean break last week. And again, there's not a lot of resistance up here, guys. Look at that sell-off back in March. Very little resistance there, and you can see the thin on the price by volume. So as long as if the market holds up, this could easily melt up quite a bit higher. Or you get a pullback, and these necklines could be support. Would be an area to look to buy. Next, chart number 44. Here's industrials. They've been one hell of a sector, extremely strong. Still above their 9 EMA, very strong uptrend. We are losing momentum though. Look at the MACD trying to cross to the downside. Next, chart number 45, materials. Again, no changes, still in a strong uptrend. Next, chart number 46, Consumer staples. Remember last week we were showing this as a coil. It busted out of the coil for a nice trade if you took that ETF. Next, Jabber 47 utilities. They've been strong. Remember last week we were showing some trade ideas in this sector. Let's take a look at one of them. Jabber 48 UTSL. That's the triple ETF for utilities. We were showed that this was a long idea last week. This coil broke out last week. Nice move, at least to the 200-day moving average. Was an area to take some profits. Otherwise, the chart still looks fine to me. Next, Jabber 49 XLV Healthcare. We were showing this as a coil over the last couple weeks. Broke out in a big time last week. Nice move up. Next, Jabber 50 XLE Energy. This area has been very strong. Testing this upper channel area. Next, Jabber 51 Oil Services. Testing the recent highs. This area has been much stronger than XLE Energy. Very strong sector. Congrats if you guys have been holding these. Next, Jabber 52. Here's the bullish percent energy index. Now, be aware, guys, this is up here at 91% now. Again, it can stay elevated, but this is in the overbought territory. The time to really buy these energy stocks is when the bullish percent energy index is down in this oversold area, like it was back in May and early June. Okay. Now it's in the overbought territory. Doesn't mean you sell everything here, but this is an area to go long a bunch of new swing positions. Best to wait for a pullback. Finally, Jabber 53, here's oil services, weekly view. Again, I've been talking about this. There is a supply zone here where we may see a pullback soon. Okay. Obviously, we've had a hell of a rally off this demand zone from earlier this year. But if we can eventually get through the supply zone, there's a big thin zone above in green where a price could melt up through way up into the 420 area. Next, Jabber 54 emerging markets. They bounced today. They had kind of a flag look to it. Nice bounce here. Next, Jabber 55 KWeb. This is the Chinese Internet ETF. Nice rally here. Good volume. Finally, Jabber 56 BABA. Now this is the weekly chart. Hell of a correction, obviously, from that 2020 high. Looking a little better here short term. It's trying to base out a bit. Moving on to commodities. Jabber 57 DBC. Now this is the weekly chart, but already it's up 1.8% for the week. 2 weeks ago, it started trying to break this big weekly wedge. It had a follow through last week. Nice move this week already. Again, commodities look really good here, guys. And you can see how this found support right at that 200-day moving average. We had this wedge has been developing for over a year. Next, Jabber 58, there's the daily view. Again, DBC broke out of the wedge, pulled back tested the wedge as support. Classic TA, big rally up. Looks very good. Next, Jabber 59, crude oil. This is the weekly chart. Similar chart actually on the weekly to DBC. Next, Jabber 60, here's the daily chart. Now, you can see today crude oil regained its 200-day moving average. We'll see if it can hold that. But this 200-day moving average has been a sticking point. You can see it was a sticking point there earlier this month. Price pulled off of it. Price pulled back off in April off the 200-day moving average, and back in August of last year. So the fact that it's regaining this is a positive. Next, Jabber 61 natural gas still continues to base out here. As Steve discussed in the weekend, you might want to take a look at some of the best natural gas stocks. Some of those may be good buys for swings. When this eventually comes out of this base, that could be a pretty good move. Next, Jabber 62 copper, bouncing off this trend line support for now and these moving averages as well. Next, Jabber 63 DBA agriculture ETF, just up and away. Again, look at this textbook TA, guys. Broke out of this channel, went to 22 back in June, pulled back back tested the channel trend line, found support there. Just classic technical analysis of previous resistance becoming support. It's now made a new high. Next, Jabber 64, there's the weekly chart. Again, this looks like it's eventually going to break out. And what really did well today were corn and wheat, the subcomponents of DBA. Next, moving to bonds, Jabber 65, TNX, 10-year Treasury yield, bounced off this trend line last week at 50-day moving average. Next, Jabber 66, there's the weekly chart. Next, Jabber 67, TLT, 20-year bonds, again pulled back off that little trend line within the channel last week. Next, Jabber 68, there's the weekly TLT, still in this channel. We bounced off the lower channel line about 2 weeks ago. Next, Jabber 69, high yield corporate, still just chopping around here. It's still holding the 9 EMA. Remember, the market, S&P, tends to follow this, so you always want to watch this. Next, Jabber 70, there's the high yield corporate on the 2-hour chart. It's the pattern to monitor for now. Next, Jabber 71, Bitcoin, crashing through this little shelf support at 29,500. Be aware. Next, Jabber 72, US dollar. I said over a week ago that it was oversold to look for a reversion to mean bounce, and we've gotten that. So 20-day moving average above is an area to watch for it to potentially find some resistance. Next, Jabber 73, US dollar on the weekly. There is a demand zone down there. So for now, we've bounced off the top of that. Also, you have the 200-week moving average there. Next, moving to precious metals, Jabber 74. No changes here on gold. We're still monitoring for this pullback to eventually form a higher low right shoulder of an inverse head and shoulder pattern. Next, Jabber 75, there's another daily view of gold. Same thing. This one has the GDX-GLD ratio, still looks okay. Next, Jabber 76, gold on the monthly. Steve discussed this on the weekend as a potential big cup and handle, and looking for a new eventual breakup to a new all-time high. So in order for that to occur, I think what we need to see is for gold to eventually decouple a bit from the dollar, not move in completely inverse to it. But I do think gold's going to have its day and have a big rally to new all-time highs, maybe this fall. Next, Jabber 77. Here's the yen versus the gold. And one thing I want to point out here, the two tend to be highly correlated, but lately the yen has been giving early warnings, just like back in March, April, the yen started weakening before gold, and that gave you an early warning for a correction in gold. And here just recently, you could see the yen started leading down before gold topped. So it's always tends to be a leading indicator here. Next, Jabber 78, here's the Swiss franc versus gold. And this is actually a better correlation than the yen. Look how closely these two mirror each other. And here, even just recently, the Swiss franc was leading down ahead of gold, just like it led up ahead of gold. So a couple things to monitor. Next, Jabber 79, silver, pulling back. Again, this simply had a perfect ABC pullback into that 200-day moving average in June. That was a great area to go long. It's pulling back here. I do think it's got plenty of support, such as the 20 and 50-day moving averages below, which could be tested. Next, Jabber 80, there's this big monthly chart Steve discussed on the weekend, this potential cup and handle. To me, it's not really a cup and handle, but I could otherwise, if it can break out over this trend line and this area really start to move, I could see a big breakout coming for silver. Next, Jabber 81, here's the weekly view. Got this potential inverse head and shoulder pattern. You could also form a bearish head and shoulder pattern if this were to really sell off. You could see it here. But for now, I lean to the bullish inverse head and shoulder pattern. Next, Jabber 82 GDX continues to pull back after breaking out of that channel, getting overbought. We're still watching for this to form a higher low. If it loses the 50-day moving average here, you have the 20-day just below. Next, Chart 83, there's the weekly view forming a potential big coil, as you can see. Next, chart 84, GDX on the 2-hour view. The reason why I'm looking for a higher low here is because I can count 5 waves up. Now, this could be 5 waves up of A, this could be a B pullback, or this could be 5 waves of 1. This is a 2 pullback. Either way, I'm looking for a higher low. If this wants to go lower, there's an open gap, which you can see there in early July. It could be a magnet around that 61.8 fib. Either way, I'd be looking for another move up, at least in a wave C or a more bullish wave 3. So I am looking to buy this pullback sometime. All right, guys, moving to trade ideas. So chart 85, XP was a long idea of mine over a week ago. Beautiful move out of this coil. Broke out last week, has continued moving. Congrats if you took this, been one heck of a trade. There is some MACD divergence here setting up, so trim and trail. Take some profits, keep your stops tight at this point. Next, chart 86, RVLV was a long idea a couple weeks ago. It continues to play out nicely, holding that 9 EMA all the way up. Next, chart 87, IDXX just continues to ride that 9 EMA up. Been a heck of a swing trade from that entry back in June. Next, chart 88, DO, Diamond Offshore. These energy plays have been awesome, like this one. Was a heck of a trade, swing trade out of that coil in June. Next, chart 89, Rig, another one. Beautiful move out of that coil. And you can see lately it's been bouncing off that 9 EMA. Next, chart 90, PRMW. This wedge pattern has played out fantastic. That was a long entry from back in early July. Next, chart 91, TSE. This one's still just chopping around after the initial breakout. At this point, you could probably put a stop around that 1661, a little higher low if you're still in it. Still hoping for another push up higher to that 200-day moving average. Next, chart 92, CLSK. This one basically played out, more than hit our target. You could see how it lost its 9 EMA last week. It's probably going to test its 20-day now. Next, here's some new setups, guys. Chart 93, 9. It's an energy play. It is coiling. Remember, we had this as a long idea back in early July, and that pullback was a hell of a move. It is now coiling here, so one to watch for another pop. Next, chart 94, there's 9 in the daily. Again, as you know, it's come out of this long-term base again. Next, chart 95, NEO. This has been on the watch list. Big pop today. Great volume. Next, chart 96, LU. Here's a new one. Nice volume today. Testing horizontal resistance here at 172. Looks good. Next, chart 97, SDIG. Notice this bull flag setting up. Good volume. Resistance would be today's highs essentially. Next, chart 99, VNet. Nice base here. Good volume today. This could be a lower risk entry with a stop right at the lows. You can see resistance matches these confluence of moving averages. Next, in the final chart, chart 99, VBTX. Nice little base here. Resistance right around this 21 area. All right, guys, we'll see what happens tomorrow, and have a wonderful evening. Take care.